Good morning, everyone, and thank you very much for joining me. This is the Morning Market Review. It's Tuesday, it's the 19th of December. My name is Russell Shaw, I'm a Senior Market Specialist at FXCM, and just want to draw your attention to my email address, which is rshaw@fxcm.com. Just going to go ahead and go through our disclaimers. What off with the high-risk investment warning, and we'll keep this on screen for a few moments. Just reminding you that this will be the last week of webinars for 2023, so just bear that in mind. We'll end off on Friday. Good morning, Kim, and welcome as always. Hey, James, good morning to you and welcome. I'm just going to go ahead and bring up our market commentaries disclaimer. Hey, Raj, good morning to you and welcome. All right, and here is our references market scope 2.0 in tradingview.com. I think it's worth mentioning that we're going into a quiet period. I think that's pretty obvious, goes without say really. So just be aware that liquidity might not be as forthcoming as you guys are used to. You know, it's just low liquidity can have volatility implications. Just be aware of that. Here's our real rate. We did look at the oversold condition yesterday. It seems to be stabilizing somewhat. It's still tending towards oversold position. Just again, I don't know how much more give there is here in terms of downside until this normalizes a bit more. And of course, the real rate and rates in general, yields, have been key drivers of our strategy. So the fact that we went oversold here and we spent a fair amount of time on it yesterday is something we've got to watch for. Let's just go ahead and take a look at some of the charts on market scope. And the first one I wanted to take a look at was the DAX, because the DAX has actively now normalized. So I think that is a good thing. We were very frothy on the DAX for quite a while. It ran hot during the froth period. I think that's unusual. We don't usually get such a sort of a sustained overbought condition. This is really a strong overbought condition, and eventually it's normalized, and I think that it just makes me more comfortable in approaching DAX. And the fact that we are at resistance here on the DAX is, I think that's interesting. What I'm going to do here is, because the DAX has normalized, I think that we can actually sort of put the red shaded horizontal as resistance and look at it now as being a potential support. And let's just see if it comes back, hits its support, and continues to make headway to the upside, right? So I'm much more comfortable that that overbought condition has disappeared. In effect, it means that, yeah, let's take a look and see if there are some support levels on the hourly. And what's nice to see here is that the stochastic has turned up. In fact, there is, we don't mention it all the time, but there is a positive divergence here. The reason that I'm bringing divergence into the stochastic is that it was the original signal, according to George Lane. So the idea here is that potentially the movement to the upside here, but we're missing a trigger. Okay, we're missing a trigger. And what's the trigger? The trigger is the EMAs need to turn up. So James asking, a risk on going forward. You know, I think, James, it's important to say, we can't predict. Let's react. So let's just see if we get the EMAs turning to the upside. If we get the EMAs turning to the upside and we got the stochastic pointing to the upside, then really it needs to move into the upper quintile and hold. And if we get into the upper quintile, then we've got the risk on. But there's some technical developments that need to take place for that to happen. But I think the fact that the overbought condition has resolved itself, to me, just makes it more comfortable. It was a weird one. It was definitely a weird one. Why do I say weird one? Because it was really overbought for a sustained period. I mean, really since through November, so more than a month, just driving sideways, grinding higher at this frothy. Not much you can do about that in terms of technicals, because the market's just not cooperating with the technical analysis. It happens. What's interesting here is that the fall off here is not that severe just yet. Generally, what happens is that the longer you stay overbought for, the more downside there is when it unwinds. So we seem to be having a tendency, James, towards risk on. We definitely do seem to have that tendency towards risk on. I don't think that's surprising, given the fact that the yields have come down really nicely. We are getting inflation, PCE, coming out on Friday. I'm very interested to see that after the previous CPI that came out, which was a little sticky. But by and large, the Fed here is giving, I think, the market a bit of a lift, a bit of a tailwind here, and that's what we're seeing. But just taking a look at the DAX, I'd be very interested to see the EMAs develop angle and separation to the upside. Yeah. Hey, Amy, morning to you and welcome. Let's take a look at the dollar. All right, so what we want to see, James, if there is going to be risk on, we want to see some pressure to the downside with the dollar. Let's see if we're going to get that. Again, don't predict, it's better to react. And let's just do a top down here. You can see that, again, it's below that 30-week exponential moving average. The 30-week exponential moving has importantly turned down, and the RSI is below 50. We're getting a bit of blue here, so perhaps a rally in a downtrend. If we go through to the daily chart, it does seem as if we got the order back. Remember that when I say order, it was a very ordered move here. And now if we stay in zone 3, then potentially a movement like that. Again, we're very much dependent on the real rate, which is tending towards that oversold. So it's not, to me, it's not the easiest environment we've been into. I think that oversold condition on the real rate, something that, again, just to pay attention to. Nevertheless, we go down to the hourly chart here. Now, what we can do is we can keep an eye on the R1 level. Okay, R1, R2. And we want to see if the EMAs cross to the downside. We want to see if the stochastic crosses to the downside. We don't have either of those triggers yet. Those triggers need to be pulled, and then we need the stochastic to drop to the lower quintile. And then I think that we have the potential for that risk on move. What does it mean when it is oversold? Is it time to buy? No, it doesn't necessarily mean that. Yeah. So we're looking at yields. The yield is oversold. Well, if the yield is oversold, then the price of bonds potentially overbought. Remember, there is that inverse relationship between the price of bonds and the yield to maturity of bonds. I know that sounds complex. I know that sounds complex. We did do a webinar on it. I may have sent it to you. I think I recall sending it, but if you haven't got it, just email me. I'll send you a link to that again. It's fairly in-depth. The idea here is, of course, that we need to get the triggers to get pulled. React, don't predict. React, don't predict. Okay, so even yesterday, can see the fact of the matter is that the yield was oversold. We got limited downside, right? We really got limited downside yesterday. You can see, in fact, we got slight movement up here, didn't we? Is it a webinar about bonds? Yeah, but it's not. It's. I think there's about 2 or 3 webinars there. We did it maybe a year or 2 ago, but I do have the links. Let's see what the euro's doing. Okay, let's see what the euro's doing. Again, before we do that, just with the dollar, keep an eye on R1, R2 as the key reaction levels. Just take a look at euro. All right, so if the this is interesting because you would expect it to be running downwards if the dollar is running upwards. The fact that the euro is running upwards perhaps suggests that we do get a turn down in the greenback. Perhaps we do. Okay, let's see if we get some angle and separation up here in the EMAs, and if the stochastic makes it through to the stochastic, then we may have some legs here. And we may have some legs here. R1 acting as resistance. So let me just reiterate, because I think I've come across as a little confusing there. Typically, the euro US dollar should move inversely to the FXCM US dollar basket, right? So they're both moving upwards at the moment. So euro US dollar is moving upwards. US dollar, I'm just bringing that up, moving upwards. That's a sort of a broken relationship. Like one of these has to fold. Either the euro has to head downwards, or the US dollar has to head downwards. Okay, I think that if the euro is going to carry on with its trajectory, US dollar should fold. But again, I don't know. We have to get the triggers there. Let's just take a look at cable as well. All right, and again, it's moving in the northeasterly direction. So either it folds to the downside, and or dollar folds to the downside, one or the other. So I think there's opportunity one way or the other. It's just a matter of seeing which of the two rolls over. So keep an eye on that US dollar. Keep an eye on the R1, R2 levels. Those probably amount to some sort of key reaction points. Don't predict, react. I want to take a look at US dollar Japanese yen, which is probably having some sort of influence on the US dollar basket. And the reason that there could be some sort of influence here is that the Bank of Japan actually has held rates, short-term rates, negative. The market was potentially asking whether it would pivot and move away from negative rates. I think it was too early. I think we would see some sort of hikes coming in 2024. The fact that the Japanese yen weakened somewhat here is probably what's influencing the US dollar somewhat, and that's why we're getting the US dollar moving in that northeasterly direction. Okay, so that's what I think is causing it. Nevertheless, I still would be of the opinion that the US dollar cannot move in the same direction for a sustained period as euro US dollar, pound US dollar. So something should give eventually. Okay, let's just take a look at gold. Let's bring up gold. All right, again, gold, a bit of an oddball at the moment. Why do I say an oddball? Last week's candlestick is a very strong looking spinning top, candle of uncertainty. We did draw this line in the sand yesterday. We want to see if gold can take out last week's high. If it can take out last week's high, then we've got the next higher trough in the trend. That I think would bode well, given the fact that the RSI is above 50. That would tend to indicate some sort of pressure would be manifesting on greenback. And that would make the linearity of the intermarket relationships, I think, much more recognizable. So there is a bit of gray at the moment. We just want to see if there is some movement up in gold. If we get that movement up in gold, then I think there is pressure on the greenback. Given last week's spinning top, it's no wonder that we are in zone 2, which is neutrality. And I think just keep an eye on the EMA. Does the EMA cross positive? Trigger 1. Does the stochastic cross positive? Trigger 2. If so, keep an eye if it moves to into the upper quintile. That to me would suggest a shift towards underlying fundamentals where there should be a weaker greenback. The fact that the greenback is not showing weakness, well, you know, that's reflected in the fact that the stochastic hasn't turned yet. So I want to see the turn here. I want to see the turn in the EMAs. So at the moment, we're kind of sitting at these points of potential turn. We just want to see if they do in fact push and cross over. All right. I think controlled currency, you know, I think we're at a disadvantage. Can you guys hear me? Just want to double check. Okay, cool. So just what I was saying there is I wouldn't consider Chinese yuan because it's not a free floating currency. It's controlled by the POBC. All right, so Nasdaq, well, you could just see the end of the year rally has really pushed Nasdaq much higher. What do we have? Overbought condition. Okay, so what I think is happening is we are getting that end of the year rally. We are getting that Santa rally. But the idea there is, I think that as we move towards this lower liquidity period, we may get some sort of stabilization running into 2024. And I think this is all really stemming from the fact that the yields have fallen too fast, too soon. They fell very much into that oversold, and I think that's reflected in the overbought condition on Nasdaq. So let's just see how that resolves itself. Okay, are there any questions? Are there any questions? Just go ahead. All right. I think what we can do is conclude at this point. Just remember that this is the last week of webinars for 2023. All right. Have a good day ahead, guys, and I shall speak with you tomorrow morning. Thanks, guys. Cheers.